Today, we're going to crack open a document that, at first glance looks pretty dense, maybe a little official, but inside it tells this incredible story about the technology that's literally inside your phone, your computer, and even the AI tools you use every single day. We're taking a deep dive into the quarterly financial report for a company that is right at the heart of our digital world, Micron Technology. So Micron recently filed this report with the U.S. Securities and Exchange Commission. You've probably heard of them, the SEC. Now, this document is called a Form 10-Q, and it's a mandatory public update. You can think of it as the company's way of telling the entire world, we're talking investors, competitors, and folks like us, exactly how they did financially over the last 3 months.
Okay, I know what you might be thinking. You see pages of numbers, all this financial jargon, and yeah, it can look like a completely foreign language. But trust me on this, by the end of this explainer, you'll be able to understand its most critical pages, and you'll see the story that those numbers are trying to tell. All right, let's dive right in.
So here's our game plan, our roadmap for this whole thing. First up, we'll get into what a 10-Q report actually is. Then, we're going to take a guided tour through the 3 core financial statements. That's the income statement, the balance sheet, and the cash flow statement, with a quick stop to look at something called changes in equity. And then, the best part, we'll see how all of these pieces magically fit together.
First things first, let's lay the groundwork here. Before we even get to the numbers, we really need to understand what this document is and, frankly, why it matters so much.
So, the Form 10-Q, it's a non-negotiable requirement for any company that's publicly traded in the United States. They have to file it every 3 months, and it gives investors, analysts, really anyone who's interested, a clear, unfiltered look into the company's financial health. Just think of it like a mandatory progress report that the whole world gets to see.
And the company we're talking about, Micron, is an absolute giant in the semiconductor industry. I'm talking about their high-performance memory, the DRAM and the NAND chips. They are kind of the unsung heroes inside the devices that power our modern lives. From your smartphone to these massive AI data centers, their stuff is everywhere.
All right, let's make our first major stop. How do we know if a company actually made any money? Well, for that, we look at the consolidated statement of operations, but everyone just calls it the income statement.
You know, the quote here really puts it perfectly. The income statement is kind of like a video of the company's performance. It doesn't really care about what happened before this period or what's going to happen after. It measures everything over a very specific window of time. In this case, it's the 3 months that ended on November 27th, 2025. And it's all designed to answer one very simple question: was the company profitable?
And here it is, the report card itself. And we've simplified it just a bit for clarity. The trick is to just follow the numbers from top to bottom. The story always starts with revenue. That's all the money coming in the door. Then you start subtracting all the various costs, and whatever is left at the very end, well, that's the final grade. That's the profit.
So we're going to start at the very, very top with revenue. This number represents the total value of all the memory and storage products that Micron sold this quarter, and it's a massive $13.6 billion. But now look at the comparison to the same quarter last year. Wow, that is a 57% jump, which signals some incredibly strong demand for their products.
So after you subtract everything, the cost to make the products, all the R&D, the marketing, the taxes, all of it, we finally arrive at the famous bottom line, net income. This is the crucial point, right? This is the actual profit that Micron walked away with, $5.24 billion. Burn this number into your memory, okay? Because it's definitely going to show up again later.
Okay, let's move on to our next statement and see how this all starts to build on itself. We're now looking at the balance sheet, and this thing tells a completely different kind of story. So if the income statement was a movie of the last 3 months, the balance sheet is more like a single photograph. It's a snapshot taken on one specific day, November 27th, 2025. It's not trying to measure performance over time, it just shows the company's entire financial position at that single moment. Now, I want you to look really closely at this simplified balance sheet. The first number you see, total assets, is almost $86 billion. Okay, now look at the very last number, total liabilities and equity. It's the exact same amount, down to the dollar. And believe me, that is not a coincidence. It is the most important rule in accounting.
And this right here perfectly illustrates the single most fundamental rule in all of accounting. Think of it this way. Everything the company owns, all its assets, like its cash and its factories, all of that had to be paid for somehow, right? It was funded by either taking on debt, those are its liabilities, or by using money from its owners, the shareholders, and that's the equity.
It absolutely has to balance.
So, you might be asking, where did that $58.8 billion in equity come from? Well, our next statement, the statement of changes in equity, it gives us the answer. It's basically the bridge that connects the balance sheet from the beginning of the quarter all the way to the end. It's actually really straightforward when you see it laid out like this. So the company started the quarter with about $54 billion in equity. Then you add the profit it made. Hey, look familiar? That's our $5.24 billion in net income from the income statement. Then you just subtract the money that was returned to shareholders, things like dividends and stock buybacks, and voila, you land exactly at the new equity number.
Okay, so we've seen the profit on the income statement, and we've seen all the assets on the balance sheet. But here's a key point. Profit is not the same thing as cash. So now we need to follow the actual money with the statement of cash flows.
That's exactly right. A company can look profitable on paper, but completely run out of cash. That's why this statement is the ultimate reality check. It totally ignores accounting concepts like depreciation and just tracks the hard cash. Where did it come from and where did it go? And this statement very elegantly sorts every single cash transaction into one of just three buckets. Operating activities, that's the cash generated from the main business, from making and selling chips. Investing is the cash spent on big-ticket items, like building new factories. And financing is cash from things like taking out loans or paying dividends. For Micron, its core operations brought in a really healthy $8.4 billion in cash this quarter. And now for my favorite part. This is where it all just clicks into place. You see, these three statements, they aren't just related, they are woven together in this perfect logical loop.
I want you to go all the way back to where we started. Remember that bottom line profit of $5.24 billion from the income statement, the very first financial figure we focused on? Now watch this.
And there it is, the first major connection. The statement of cash flows actually uses net income as its starting point to figure out the actual cash generated. It takes that accounting profit and then it makes a bunch of adjustments to find the real cash number. That is the first critical link in the chain.
And the final piece of the puzzle falls right into place here. That ending cash balance that we get from the cash flow statement, it appears right there on the balance sheet as an asset under the line cash and cash equivalents. So just think about the journey we just followed for a second. The net income from the income statement starts the cash flow statement. The cash flow statement then calculates the ending cash balance. And that ending cash balance becomes a key asset on the balance sheet, which closes the loop perfectly. So, now that we know how to read the map, in part 2, we'll dive deeper into what these numbers truly tell us about Micron's business.